Hey. I hope all is well, amigos. Long time no see. As I mentioned on Twitter, that I will try and do a video about the liquidity event Algo, which is the second Algo that I'm working on. This is just some of the rough concept and conversations, the raw conversations that we're having. This is like the third session, and it's half of it. Um, it's gonna be long. It's gonna be boring, but you can always listen to it at the side, or if you're working and recapping, it may benefit you. So that's what that is all about. I apologize again for the quality of voice. I literally got a brand new mic about like 2 months ago, and to my luck, the audio quality is bad because it's probably far away. This is a better audio quality than that. So that stuff aside, the video what's going to talk about is liquidity event, kind of brainstorming and moving forward. I would say it's about like 35-40% done. It's something I pride myself on. My close friends, I joke around and I said I'm going to change my name to the liquidity event, and I might, because I love that type of trade where you have 10 to 1 risk reward, and my trading style is I cause a small panic in myself to put on more risk as it goes into the money. So yeah, that's what I'm working on. This is the second event, and the other thing being said is if you are a 7-figure trader or a late 6-figure trader and you're outside of USA and you're tired of TZ, feel free to shoot me a message on Afghanrebel on Twitter. We have a small little prop firm. I haven't really advertised it much at all, but there's like 6-7 traders at the firm. Most of the guys are 7-figure traders, and basically the commissions are 0.0006, so it's like 90% cheaper than trade zero. You get the rebate. The locate is you pay for what you use. So if you borrow 50k and you use 10k, then you only pay for the 10k, and it's a 90% payout. So the intention is to financially make it better than a retail broker, and it's reliable. It's not like trade zero. The motivation came from not being a U.S. citizen and not having good platforms out there. So we have a few spots open. So this is not like a marketing gig, but we probably, like, when we get, I think, anywhere between 12 to 15, we're gonna not accept any more people, because I don't want it to be a human resource business. Just quality people, smart, level-headed traders where we do recap together, but where we can grow and push each other to do better. So if that's something that interests you, shoot me a DM, Afghanrebel, on Twitter. It's a much better place. And if you enjoyed the video so far, let me know. And if you didn't enjoy it, you have a way of improvement outside of the audio, let me know. See you guys. Enjoy the video. Bye.
You could take like a weekly pivot or something of that nature.
Yes, basically, but like being able to code that down and having the code able to identify where this key point has occurred. And so a couple of tests that I will run a little bit later is like basically looking at candles that maybe have like a really large body, or candles that have a really large volume, or candles that really stick out, like candles that set the high on the daily chart.
I think that's
for like a couple of months on either side of the candle. Yeah.
I think I did a bad job at explaining the daily thing, and I apologize.
Mm-hmm.
I think what in my normal trading experience is, yeah, it doesn't, like, it's good that it has a daily extension, but that's a very nuance, but that's not so important. What would be important is if so the variables that we need to determine is whether it's 1 week, 2 week, 3 week, 4 week, or 8 weeks. And the other criteria is that the stock just has to be up either from the low to the high, the low of the daily chart and the high of the daily chart, either 100%, 150, no, 100%, 150%, 200%, 500%, 600%. No other criteria of intraday. The extensions and things, those are very deep nuances that we can go into later, but if we start with that, it will mess up the whole thing. Is that what you were doing, or were you including something else? The two variables basically are how high and low, what the difference is, and the time period.
Yeah, those are the things that I looked at. Yeah.
But you said something about extension on daily.
Yeah, so for like, oh no, so basically what I meant was what you said. I just phrased it differently, yeah.
Oh, okay, so you were looking at that. What was the liquidity event entry should be either the previous day's high, like if it goes above and then it goes below the previous day high, or the past 3 days high. So basically, everything we did today, which was super duper cool and clear, we said, hey, this is the P&L curve when we change this variable. This is the P&L curve when we change this variable. So we need like 8 P&L curves. One will be for different times. How, like the x-axis. This is the P&L curve. If it's like 100% or 200% within 1 week, 2 week, 3 week, and the other P&L curve is the extension. So 100%, 200%, 300%, 4%.
Yeah, that's all fine. Yeah, the only thing that needs work on the thing that I currently have. So I have all of this. The only thing is finding or having cleaner tests of these, or identify these liquidity levels, like you said, like the previous day's high or a pivot point previously or something like that.
I think in my experience, it should only be the high. Like we shouldn't.
Like the previous day's high?
Previous day's high, yeah. Either previous day's high
Okay.
or the last 3 days high.
Okay.
Because we're trying to just
that makes it easier.
Action. Yeah, just price
Okay.
action.
All right.
Are you able to spit out some of the P&L curves, or does that take a while?
No, that's gonna take a while. I'll hopefully have that done tomorrow though.
What's your opinion on the speed that we're going, and where do you think our focus should be? Should it be still at finishing this stuff, or because I don't want to overdo with things.
It won't take me that much time to get like a couple of curves for this daily extension, like liquidity grab play. So I think it's worth a shot taking a look at it. Like it will take me like about half an hour to an hour to write the code for that. So it's definitely worth a shot. But yeah, I think even if that doesn't work out or it looks good, like finish what we have right now first, like in great big detail, and then maybe even live tweet it for a little bit before moving on to like these daily charts.
Okay. So then let's do like how do we move forward? Matthew, this is the best one we have so far. The best one we got so far. So this, I tagged you in the room Algo scanner, Matthew. The two variables we have currently are only 39% from yesterday's high and 6-minute close. And now, Architect, how do we use the Algo or AI? Like, are you able to give the Algo this info and then it predicts its own thing? Other than the 50-cent thing that you mentioned, is there anything else that it can do to increase the performance?
Yeah. Let me see what happens if I give these trades to the Algo.
Does the Algo have Arvo in its arsenal?
So the AI has.
That's what I was here.
Go ahead, Matthew. Sorry.
Yeah, that's probably going to be a really key factor is where's the most amount of volume position. So if if on the liquidity event, if it fails and closes 6 minutes below, but there's still a lot of volume, like relative volume below, and there's a lot of structure beneath still, then relative to the amount of volume that was done in those 6 minutes or above that, then I think the skew is going to be a lot different. So if there's a way to get a volume criteria that there has to do X amount of R-vol within like 6 minutes, or for the point after the liquidity event, X amount of R-vol, I think that would be really important. That way, the majority of the volume is positioned above the entry spot.
So the problem with that is almost all of our entries will be near the high of the day. So the only way that would work is if the liquidity event happened, what's referred to as the backside. So I think there's two types of liquidity events. One happens at the high of the day, and the other one is on the backside. So that's actually a really good point. So if we're doing the backside liquidity event and the volume point of control is higher, that's going to make a big, way better fader. That's a really sexy point there, Matthew. Awesome.
Yeah.
Are we?
And even what I was thinking, if you took like after the liquidity event took place, you would want some way to measure the volume that came in that liquidity event relative to what's traded that day, because if it's like soft, obviously there's going to be volume at the top because it's a liquidity event. And if you're stopping, there's going to be volume there. But for my trading personally, the amount of volume done before I enter, the amount of volume above my entry price, and I'm entering near the top of the lot, it makes a big difference for my system. So it's something that I would think about. And like you mentioned, having some R-vol or some way to calculate that, or maybe the top 5 highest volume candle of the day, just something to calculate that. I think that would help out the amount of winners to losers.
Architect, how is the AI currently incorporating R-vol?
Let me see. So I just quickly will post something before that. A sec.
Yeah, that's really cool.
So the bad thing. Yeah.
Go ahead.
Yeah. So the bad thing about like reducing the number of trades, like originally we had like 17,000 trades, and we reduce it down to 4,000 with these 2 criteria. So the bad thing about that is that then the AI has much less trades on it for it to practice.
Okay.
So like it has a much harder time, it seems like, to like extract some more juice out of it. So the profit curve of the AI isn't that improved. But that's also a good thing that having these 2 variables means so much.
Wait, so
I think that's natural. It's kind of like at first you're going to make really big steps, and then over time the steps should be smaller and not as big of an impact, but still an impact.
Architect, what did you post? This chart, what is this?
So so the AI trains on the first 75% of the data, so like 3,500 trades, and then this last 500 trades is the ones that it has predicted on. So the basic criteria is that we're only looking at trades that are up 39% and the 6-minute entry criteria is met. And so those are the trades that the AI has trained on. So that's the result of that training, basically.
Oh, that's worse than our raw data.
Yes, but it does look at fewer trades.
Okay. Is it possible? So, how many do we have so far? So our best model, we're at 4,500 or something?
Yeah.
Can you let the AI run on all of it and see how it would, like what variables it would use? Is that a possibility? Please, thank you.
Yes. I will just generate that now.
Thank you. And then I have a feeling the RVol is calculated wrong because I know like RVol makes a big difference. The fact that the AI said RVol is not an important thing, it kind of makes me think that it's a flaw how RVol is calculated. Because RVol is like the king. That's what differentiates for me an A to an A++. Time of the day and
Yeah.
RVol.
Me too.
So Matthew, how do you calculate RVol? My perception is always what I look at, and it's really visual. But Matthew, have you ever coded? Do you code?
No, I'm completely visual as well with the volume candles.
Oh, okay, awesome. So yeah, so when I look at liquidity events, what differentiates an A to an A++ is if it's either at the correct times, which is the morning times before 10, or near 2:30, and I'm looking at the volume candle to be much bigger. How much bigger, I don't know. So, but it usually has to, the bigger the candle on rejection, the higher the probability that it's not going to reclaim. But we have to quantify that, Matthew. I don't know how to quantify that. I think originally when I
yeah, right now the limitation that I have, like in the current code, the only like RVol that is calculated is for the breakdown candle. So basically just for a 3-minute candle. It doesn't look at the volume of the candles that were spent above the previous high, which I should add. So it breaks the previous day's high and then it spends like at least 6 minutes above it and then it breaks down. And right now, the only RVol that is calculated is for that 3-minute breakdown candle.
But what does it do? It looks at the volume on the candle and then it compares the past 5-10 minutes. How many candles in the previous day?
Let me just check.
Okay. Hey JJ.
Hey guys.
Yo JJ, what's up?
Not much. How's it going?
Really good, man. Really good.
What are you guys talking about? Can you hear me?
Yeah, I hear you, brother. I got some family members around, but you know what we're talking about.
What are y'all discussing? Are you talking about me?
Yeah, bro, we're talking how shit of a person you are. How you go to Japan, you don't
We're talking about his girlfriend life.
Oh yeah.
Hell yeah.
Well, please continue.
Oh. Basically, JJ, we did a lot of like trial and error. The best liquidity event we found with the best variables so far is if it's either has to be 39% high from yesterday's close and 2 3-minute candles, so 6 minutes has to be below the liquidity event or the high of the day. And we're checking every 15 minutes. If it goes above the high and then comes below, then that's an entry criteria. So
which are you looking at a particular channel right now? The liquid event scan.
Algo scanner.
Which channel are you? Which one? Oh, Algo scanner.
Yeah. Our best one. So the best. We probably have to clean up a lot of these things, but the best one I think I tagged Matthew in at 5:35 p.m. That said, Matthew, this is the best one we got so far.
Yeah.
And, that profit curve, I don't even know which one that is. Yeah, so that's I think the 1.56 profit factor. That's the best we got, and this doesn't include the AI trying to make it better, and it does not include us adding to winner. I'm positive when we add to winner and the AI, I can bring the profit factor to like +2. But right now we're just trying to, from raw data point, we want to make it as best as possible. Yeah, that's where we're at, and right now we're trying to see the RVol calculation. How is it calculated? Because as traders, we just look at it and we're like, hey, the volume can is bigger. But from
Yeah.
coding stands, you have to kind of say that, okay, this candle from start of this to low of this has to be bigger than the average of the past 3, 4. So you have to like be very specific with it. Architect?
Yeah, so the only R-vol calculation inside it right now is the volume of the breakdown bar compared to the 3 bars previous it. And I also include absolute numbers of like volume that are spent between the 2 highs, the previous high of the day, and then the breakdown bar as well. But now that I'm looking at the code, it's not relative, so it's only an absolute value that's in there, which is kind of useless. So I should fix that.
Okay. Yeah, because I figured.
But yeah, basically the good news is, so even without RVOL being properly calculated, these are the results we get. And yeah, RVOL should increase the performance as well.
One step we have to do is me, JJ, or yourself, architect, we have to define what's a good RVOL from a coding terms. I'm gonna take a stab at it. I think it shouldn't be just a breakdown candle.
Yeah,
it should
definitely.
It should be from the high. From, let's say, whatever that high is established. So that 15-minute high, whatever volume is above it, that candles, and the candle of the close where we had our thing triggered. So we kind of get an average of those candles, and I think we would have to compare to the past 10 candles. And then we have to let the AI pick whether it's like if it's a 1.1 or higher. I don't know, 1.1. Unless JJ, you have experience and you can like identify 100% what's a good RVOL in small cap.
I don't. I mean, I'd like to. It's all just basically just subjective, to be honest. I mean, it'd be nice if we had something more definitive. I mean, I usually look for something that's like, 3 times like the average, because I trade the 3-minute chart. Whatever that, let's say the average 3-minute candle is like 100, 200,000. Then I want it to be like 300, 600,000. Again, that's just, I have nothing that like says definitively that's what it should be, but that's just kind of how I look at it.
I'm on board with you. That's what I look at too. I look at it has to be somewhat elevated. But I think, so the question is, if we had to visualize, I guess it would have to be a test on its own, architect, but I can define it as best as I can. So defining RVOL.
I can try even a couple of definitions tomorrow.
Okay. Defining RVOL. The volume above the high of the 15 minutes or the liquidity event level. So the volume above it and all the volume from that to the point of entry level. So kind of like anything above the liquidity event and until it says enter, all of that liquidity event, get an average of the we're working on 3 minutes, right, architect?
Yeah.
Okay.
Yes.
So get an average of 3-minute candle and then compare it. JJ, would you say you would want to compare it for the last 10?
What was that?
Would you say you want to compare to the last 10 candles or 3, 4, 5 candles?
Yeah. So I mean, I have a script on Thinkorswim that shows the average volume for the day and then the average volume for the last 5 candles. So I guess to answer your question, I've been using, so if it's like between 9:30 and 10:30, I think I'd more be inclined to look at the last 5 candles. But like if it's sort of like midday or it's like chopping around low volume, then I want to use the whole day's average candle volume. You know what I mean? Because, for example, if you look at like CDIO, like around like 11 or so, like the average candle, if you go look at the last 5 candles, it's super low. So it doesn't take much for it to double the average volume. You know what I mean?
Mm.
Whereas like 9:30 and 10, between 9:30 and 10, it takes a lot to triple or double the average last 5 volume candles or something like that.
Mm.
So it kind of depends on the time of the day, I guess, is what I'm saying.
Makes sense. Yeah, I think architect, what we could look at is like just let the AI pick. I would say it defines how much volume it has done above the liquidity event to the close. Find the average volume of the 3-minute bar, and then the AI can pick either 5-minute, 10-minute, or 15-minute candles. And the idea is that it's going to be like, well, the best RVol, like to get the best performance, the RVol needs to be, it could be something as low as 1.1 to 2 to 3. In small cap, I've done some manual experiments. What I found is in small cap it's like 1.5, 2, 3, but in big cap 1.1 is sufficient enough. So yeah, it may be skewed in that aspect, but
Okay.
okay. So at the moment, the RVol, the reason why AI doesn't pick RVol is because the RVol was not written or done correctly, correct?
Yeah.
Okay,
Yeah.
that's really good news, because that will, inshallah, it will for sure increase our profit factor massively. JJ, so the best chart that we have is JJ is a robot. JJ, your thing is it's very staticky, bro.
Can you hear me?
Yeah, I hear you now.
Yep.
You were very robotic back then. Yeah. So yeah, that's where we're at. We're at 1.54 profit factor without adding to winner. Those are the variables. The other JJ, what we will need a help on is I think the next step is looking at RVol. Looking at let the AI pick. At the raw data we're at 1.54. We feed it to AI, and the AI gives us hopefully a better profit factor. And after that we look at the raw sample and the AI sample. We will get a Google Drive, JJ, and in that Google Drive it will show all the good trades and the bad trades. And as traders, we'll kind of just skim through them, and and we could tell visually that, like, hey, this is a trade we shouldn't take, or we can avoid this trade by having this variable. Like the variable example would be, one thing I found is if the stock is up goes really above it, it shouldn't add below, or at like 11 o'clock, like we were looking at the losses and we're like, hey, there's a lot of losses at 11 o'clock or something like that. So yeah, basically we look at it visually and we can make it better from that too. Architect, what do you think the next step is? We fix the RVol, we feed it to AI, or what do
Yeah, I think so. Maybe in the meantime, because I won't be able to get that done today, but I can generate a couple of pictures from these 2 criteria.
Can you do one thing?
To see if you can.
Can you run our best one, the 39%? Let the AI trade all the 4,500 trades and see what the AI thinks, like how it can perform. Is that possible?
Yeah, that's the last image that I posted. That's what that is.
No, but what did this one? So the last one you posted, the one with it took 494 trades, right?
Oh yeah, so you want to see what it did on every single trade?
Not what it did, because what I understood is it took a sample size. So if there's 4,500, it trained on half of it, like 2,000 whatever, and then
Yeah.
from that it did on a non-tested thing. It took the best variables and it traded on 500, right?
Yeah.
So what I wanted to do is I wanted to take all the information, and then I want to see, like, we don't need to do forward testing. We can cheat a little. We get the full 4,500 trades, and then we let the algo pick how does it trade. If it performs better, then we can just look at the variables that the algo used. Does that make sense?
Okay, yeah. I will run that now.
Awesome. By the way, JJ, if there's anything you want to add, or you feel free to jump in, or if things are confusing, like, let me know. I can explain, because it might be really fast paced, but we've been doing it consistently for a bit. So.
Oh, makes sense. So I mean, so basically, what you're doing is you're trying to, basically systematize the way we trade, right? Because we're basically looking for where the clear out area is, where all the stops are, and trying to determine what's the right volume, what's the right entry, what's the right exit for like a liquidity event. That's basically what you're doing, right?
Yeah. So what we did, one simple thing, JJ, is normally prior to becoming more into this algo stuff, is as a trader we just look at, hey, if it goes below the high of the day, I'll just short it.
Yeah.
So when we feed that to the algo, and the algo says just short if it goes below the high of the day, the accuracy is like 25%, and the profit factor is 80 cents. So ideally what I'm trying to create a scanner for is a scanner that gives us a 5-to-1 or a 10-to-1 risk reward, and make it so good that, like, as soon as it's in the scanner, the odds of us making money is really high. And what that does is it increases your overall performance, your patience, so you don't no longer have to take random trades. If you can identify what exactly does it take for something to become A++, then if you can put that in the scanner, then it really takes away from patience. It's just
Yeah, got it.
So in the room, I just posted the AI trades in the test data, and that overall achieves a profit factor of 2.2.
Holy shit.
But yeah, that is probably overfitted though.
Okay, so
because it does.
Can you post the variables that it determined was the most useful?
Yep.
Wait. How did it get 5,000 trade? We fed it 4,500 trades, no?
Wait, did I miss one variable?
So we had 6 minutes and we had 39% from yesterday.
Oh no, so for okay. This one I just fed every single trade, I believe. Let me see. Oh yeah, this one I fed all the trades. Okay, I'll run one with only R trades.
No, run it with the 6 minute close, the 3 minute
Yep.
close, and the 39% from yesterday's close.
Yes, that's what I meant. These ones.
Oh, that's hot. So JJ, we also have an AI thanks to Architect that basically does all that work. Well, it helps us. So you can have all kind of ideas and things out there, and it just looks at trades it all this different way, and then it compares the P&L curve and all that jazz.
Oh wow.
Yeah, you know, I also have a bunch of data on gappers. So like, basically you filter the gappers that are like a certain outstanding share count, a certain price range, and then based on where it is below or above VWAP at a certain time of the day, it'll give like the expected range. But what I've noticed too is that usually the liquidity event like at the top of the expected range is usually a good spot to look for a reversal. So if you think that data would be useful, I can provide that as well.
To re-summarize, are you saying you have an A++ setup that you trade all the time and you want to systemize it or put in a scanner?
No, well, it's not necessarily an A+ setup. It's just it's a good way to pick entries. So like you have your general idea, right? That the probability that a stock's going to fade, that's just like your general idea, like Short Bear does. He starts with a daily chart. He just comes up with the thesis. This is more about like picking the entries, because basically what the data does is it shows you like what's like the range you should be expecting between 9:30 and 10, between 10 and 10:30, right? So then that way you know like, well, if it is like, if you're looking for a liquidity event that's, let's say, in the middle of the range, it's probably not as high probability as a liquidity event that's like at the top of the range. You know what I mean?
Yeah, send it over. It's, I think it makes sense where you just have more range when you're at the higher end of the range. Whereas if it's earlier on, let's say if a stock is expected to move from the open like 20%, but if you take a liquidity event when it's at like 5-6% up, then it's not as so good. Is that correct?
Yeah.
Okay. Yeah, that makes sense. Hey, it doesn't hurt. 100%. Yeah. You can make a new channel and put it if you want, JJ.
Okay. My brother's calling me. I gotta jump off, but I'll talk to you. Let's do this again maybe after tomorrow market close. Good to meet you, architect.
You too.
All right, guys.
Take care, brother.
Yeah.
So, bro, that's fucking crazy that the AI would have traded it at.
Yeah, but that is definitely overfitted. So it's a little bit drained, and like it gives like a lot of conditions on each result.
Bro, wait, it gave a 6 profit factor.
Yes. So it's very overfitted.
Okay, so explain to me: is risk basically just like the
That's the dollar amount.
So
the difference between the entry point, the entry price, so the close of the final 3-minute breakdown bar, and the previous high of the day. So
14, is that 14 cents or is that 14% or is that the 14?
No, so that's like a value given to it. So it's called like a Shep value, and basically 1 means it's like a perfect prediction. So
like the weighted factor. I got you.
Yes, and it doesn't mean that it's always positive. So like the greater the risk, like the greater the Shep value, what this means is that the model really thinks that risk is an important factor in the outcome of it. So it will look at it in great detail.
So
and
I may be wrong.
Chart. Yep.
I may be wrong here, but my intuition tells me risk in itself is a very, very, unless you have a different view on it, like from my intuition literally tells me risk is a hindsight tool, because like it looks at the data and it just says, okay, if the stock has faded this much, it's going to continue to fade by close. So yeah,
it could be. It could also mean like it prefers stocks that have like a higher like dollar value. Like it doesn't want to trade stocks that trade like less than $1. It wants to trade stocks that are like above $10.
So risk value is not percent, it's dollar.
It's not percent, it's dollar percent, yeah. I mean, it's just dollars, yeah, not percent.
Okay. Share class So yesterday's IBS, what's that? And
Yesterday's IBS, just to double check that.
breakdown IPS. Wow.
Yeah, so that is the internal bar strength of yesterday's daily candle. So how strong the yesterday's daily candle closed.
So, and looking at the second picture, by the way, which is weird. So when I look at the second picture and the first picture you sent, in the first picture it says risk is the biggest variable, and the second one is yesterday's IBS. But when I look at the second picture that you sent, it says breakdown IBS is the biggest.
Oh yeah, so in the second picture, it's not ordered by how important the variables are.
But why is this like vary all the way to the left? Sharp value is all the way to the left and right. I don't know what that means.
Yeah, so basically the second picture, what that shows is that for the breakdown IBS, so if it is a very, very high value, meaning like the breakdown candle like still closes really, really strong, then it means it is a really bad prediction. So basically it wants to look for a 3-minute breakdown candle that closes near its lows. So that's what that means. So the red color means that the feature has a high value, in this case the breakdown IBS, which is the strength of the candle close. And because as it gets redder, it goes more towards the left, which assigns a minus value to it. And the minus value means it's a negative prediction, so it means it is a bad trade. So basically the stronger the candle at the breakdown, the worse the prediction is.
The second 3-minute close or overall 6-minute?
The final 3-minute one, the last one.
Okay. Yeah, those kind of make sense. Definitely bias. Okay, what else can we learn from it? Next high bar IBS. What is that? Which one should I look
you
at?
have
One sec. Which one should I look at?
yes.
Which
one?
Like first
So
picture or second picture?
the ones that are more interesting are the ones that are really red on one side and really blue on the other side. So that's the breakdown IBS, that's the risk. So there's also one called deviation bars dollar volume. So that's kind of like RVol, but that's the amount of volume that happened between the two daily highs. So it kind of assigns some importance to that as well. But the other interesting thing is 1, 2, 3, 4, 5, 6 down, time between next high and breakdown. I define next high as the one that breaks the previous day's high, and then the breakdown candle. So it also wants a little bit of time spent. This is like the 6-minute, and this is the 6-minute parameter that we arrived on. So the AI itself has decided that if it breaks down immediately after breaking the previous high, then it's probably not a good setup.
It's not a good setup if it breaks immediately.
Yeah.
Wow, I thought it would be a good setup. What the heck?
No, so basically what it wants is that it breaks the high and then, like the one that we coded right now, that waits for at least 6 minutes above it.
So the first picture you sent, it said risk is 0.14. The next one is IBS.
Yeah.
These are like the order of importance, right?
Yes.
Okay, so the third one is share class, shares outstanding. So
yes, that means how many shares are outstanding. And from the second picture, if we look at that, what that shows is that as the feature value goes higher, so it turns more red, then the Shep value goes left. So it wants to look at, it prefers to trade stocks that have a lower number of shares outstanding. What that exact value is, I don't know from this picture, but we can take a look at that later as well.
Okay. So if it's to the right in the second one, then that's a bad thing.
If it's to the right, then it's a good thing in the second one.
It's a good thing. If it's to the left, so if it's a negative sharp value, that's a bad thing. Correct?
Yes, correct.
Okay. So, but then it says time between breakdown. Time between next high and breakdown. Time between next high and breakdown. Next high and breakdown. So if it's to the right, that means that's a good thing. And what that
Yes.
means is time between the next high. What does it mean by the next high and breakdown?
So say the current high of the day has been set at 10 o'clock, and then the new high is set at 11 o'clock. So then the new high is from 11 o'clock, and then the breakdown is the one that closes below the previous day's high, which may happen at like 11:09. So in that case, there is 9-minute difference between 11 o'clock and 11:09.
So that's a good example. But that's a trade that would work. I'm okay. Looking at these variables, it wants lower volume, a daily gain at deviation high. Is that just a percent gain per day?
Yes, that's a percent gain. Yeah.
Per day, okay. Number of highs in deviation. What does that mean?
So that means like the number of consecutive highs that it has made after it has broken that high. Like the number of candles that keep making new highs above the previous high. Because it may be the case that it makes a new high at 11 o'clock, then it makes a new high at 11:03, then it makes a new high at 11:06, and then it finally breaks down at 11:09. In this case, it has made 3 new highs, so that number would be 3 in this example.
So it likes that. It likes that it makes new highs.
Let me see, non-highs
It
deviation.
makes sense because it's a 15-minute, yeah. Sorry, yeah, I think so.
Yeah.
The reason I was looking at this is if we can add any other variable that will naturally make
There
it
isn't
better.
anything that's very obvious that stands out.
So okay, there isn't. Then
Maybe this breakdown IBS that we can experiment with.
breakdown.
Like looking for really big, weak candles afterwards, like basically like pin bars.
But there's the breakdown IBS. It doesn't. Like if it closes really big red, then the AI thinks it's good.
Yes.
Yeah, which is like hindsight information, to be honest. I would.
No, because then it closes, like the entry price is at the close of that candle.
Yeah.
So it can know that.
Yeah, I think that's a bit hindsight because I've looked at some of the
Okay.
charts, and what it does is like when it's like a super deep reject, it's like a $6, $9 stock, and then it closes at like 6, the 3-minute candle, and then it's like, oh, this is a good trade. It's like, yeah, but we would never take at like $6 and it was
Right.
really high.
Okay, makes sense.
Um,
I'm sending the link to the images as well in the Algo scanner.
if I were to add a variable, and I don't know if it complicates it or confuses it, but for sure this plays a role. I can tell you verbally, before, time plays a really, really big factor. really, really big factor. And what I mean by that is there's certain times that stocks pick a direction and they go. They happen between 9:30 to 10:30, 10:30, 10:45, or they happen at 12:30, or they happen at 2:32 to 3:30. And 3:30, if you short, then it's a bad trade. And the reason for that is in the morning liquidity event. So, are you familiar with fundamentals and like manipulators and things like that?
Yeah, a little bit.
Okay. So most of their agenda is to basically dilute. And what they know is if we look at the volume traded on a small cap or, and actually even probably big caps too, stocks with news and anything, about 70% or 60, 70, 80%, large amount of volume is actually off the open, the first 30 minutes or so, volume and range. So the manipulators, what they try and do is they will oh shit, opening price. Sorry, I got off topic. So a variable is they will, if they're trying to dump, they will push or do a liquidity event into the morning, like on AMC today. They'll push into that and then they will just dump as much as they can. Because you have longs that are chasing, you have early shorts that are quitting. Long story short, they use the morning volume to get rid of the shares. The other one within that is 2:30 to 2:30 to 3. No, 2 o'clock to 3:30. 2 o'clock to 3:15. And the reason why that one liquidity event works is because there's manipulators that are buying the stock and holding it higher for a high close. So they lock up the float. And sometimes, unless things have changed, they need to dump those shares. So they will lock in the full float. And if they hold it overnight, then they have to do filing. So in order to avoid the filing, they do a liquidity event and then they dump those shares. So this is why in the morning, in the afternoon it works. And in the lunch, most people walk away. So there's a whole concept. The trader's like, yeah, well, midday doesn't work. So there's a shift. It's like a ping pong back and forth. The power hour into the close in the morning is effective for fades, short, and the middle is not. And what we will find is there's a period that the middle works, and the late hour doesn't work. Like sometimes basically the liquidity event will happen at 12, 12:30, and then it just fades. So basically, long story short, if we can add a variable of time, that would be important. Look, if I'm just speaking out loud, the variable time would be between 9:30 to 10:45. I can write that down, 9:30 to
Okay.
10:45. 12 to 12:50 to 1:30 to 3:15 p.m. These are my guesses, and I know I'm giving you sometimes some very blank, but if the algo thinks there's different time slots, but if we can get that as a variable, and then maybe the AI picks that we should do in all of them, or maybe we should only trade the first hour liquidity event or the late hour liquidity event. That's the thought process I think could be effective. What do you think?
Right. Yeah, makes sense. I can test those too.
Okay. What's another thing? Oh yeah, another thing that another variable that's really cool is the opening price print. a cool little nugget that I learned is an example on stock like BAER or CDIO. Like, how do you determine a stock will go above or continue to squeeze or not squeeze? Is if where it's at in relation to the opening price. So, I don't know, maybe the algo could, if you can put that in there, whether it's above the opening price print and below, and that what kind of does is it automatically does the volume thing for you. Is the volume thing complicated, by the way, to determine where the volumes are?
Determine where the what, sorry?
Where the volume is?
No,
It's
not really.
It's easy or it's hard?
It's easy.
So how do we use that? So how could we use that in our scanner, in our thing? I guess it would be the volume is above or below or near it, or how far is the liquidity event from the volume, and if it's above it or below it.
Yeah, with the volume one, yeah, the tricky thing is there's so many things you can calculate with that, right? And there are so many ways to define relative volume.
No, I'll put an example.
Okay.
So I don't use a 1 minute chart, but I'm going to use it in this instance to showcase now I think it might complicate things. I'm gonna post it, but I'm probably gonna delete it. I'm just gonna, you tell me what your thought process is. So basically what the other guy was saying is, like, if it does a liquidity event at 750, like 748 is a high, it goes 750 above, and then what it dictates is like, hey, the volume profile, like you can see the volume profile in the morning at 819 is the volume. So if a liquidity happens below that or 762, then it's less likely. But you think it will complicate it, or what's?
No, so actually adding a volume profile sounds like a good idea overall. Like looking at like you said, overall volume spent above the current price, below the current price, spent above previous high of the day, spent below previous high of the day. So that should be a cool variable, I think.
Say that again.
Yeah, no, I like the idea. It's not that complicated to program it.
How would you program it? Because I think it would be difficult to program.
It wouldn't be difficult because I can get the VWAP of every single like candle as well. So from that I can kind of calculate where volume was in relation to price.
So you need to find a clump of volume. Like if you look at to the right side, there's so many points, different reference points. Like look at the chart I sent you. So 762 is the big volume, and then you have 819, which is not as big a volume, and then you have below 750, which is not that big a volume. So how does the, like, I feel like there's so many different reference points that it'd be tough to, like, which part of these volumes that the AI or the algo would think, okay, it's good?
I think like one thing you could add, which is very easily, is you wouldn't add like single, maybe not add single points to it, but add like the total amount of volume that has happened above the current price, or the total amount of volume that has happened below the price. So in this case, like the total amount of volume that has happened above our entry price or below our entry price.
But for it to be effective, it has to be a comparative analysis, and I think it's very tough to do a comparative analysis. I think, in my opinion, we should leave it for now, unless you unless you think, like, the only way for it to be effective is it has to be comparative analysis. It's like, okay, it traded this much at any point. It's like 762 is the biggest volume point of control, and the price is below it. And then it may have missed the morning one because the volume is not there. So it makes it confusing. But two things we can add. Honestly, I think opening price is super duper important. We can add that. And another one is TWAP. What, have you looked into TWAP, or have I think I've given you the code, but it's probably difficult. Have you seen that?
No, I don't think so.
Okay.
I don't recall.
Should we just leave opening price, or are we getting it complicated when we get into volume and TWAP? TWAP is basically that red dotted line. You see the one that goes green to red, the dotted line?
What exactly is that? How is that calculated?
I sent you I can, let me see here. I'll send you a code right now. Edit source. A lot of people use it, and a lot of algos and IB and retail kind of use it. So you could use TWAP for 30 minutes, TWAP for the day, blah blah blah. It's basically for time-weighted average price.
Oh, okay, I see.
I think.
Yeah. Go on.
If we're able to add that and the opening price, it may be really good, decent variables to work off of. But if it gets complicated, bro, like, I don't want to overwhelm you, so.
No, these are simple variables then.
Okay.
It's fine.
Awesome. You want me to put this in a notepad because some of this stuff is messed up?
No, I can write code for TWAP myself. I don't need this.
Are you sure?
Yep.
What I'm gonna do is I'm still gonna give you this in a notepad, because when I copy paste it into that, just in case if you need it as a reference.
All right.
Because if you copy paste something into Discord, it like changes the font, how it looks and blah blah blah. Okay. Awesome, bro. Super duper cool. Actually, I can show you something in your inbox. This is why I am super duper excited. Let me. I don't have a lot of secrets. I'm very like open-minded with everything, but this I have kind of worked on for, like, I've had for 8-10 years, and I'm very proud of it. You see that line in your inbox?
Yep.
So that line, basically, it's always like that. Always, as soon as it touches it, kisses it and goes, kisses and goes. Most algos use it. And what it is just, it consists of volume. And my idea is once a liquidity event happens, it will always touch it, kiss it, and go. The other thing that we could do, which I think is super duper powerful, so my idea of adding to winner, imagine we do a liquidity event, this thing would have added, so I had an algo and I still have an algo. I turned it off because it's a different story, but in that situation, if you can see, it would have added at like 778, and it would have added to winner at trail stop, add winner at trail. So it adds to winner like 8 times, and then it has a trail stop, and the trail stop that I mentioned
Right.
is perfect. And then now all of a sudden you have we're one trade easily. When I've back tested it with data and everything, I had a lot of trades that made me actually 50 to 100 RR, which sounds crazy to people. When you tell people, they're like, yo, it's bullshit, but it's not. So that's why I'm super excited. So I had an idea of incorporating this into adding to winner. Another thing that I had, I'm sure you've heard of it, it's like anchored VWAP, but anchored VWAP from the time of the liquidity event. I haven't used that, but from logically, it makes a lot of sense. So what's the idea of
Yeah, definitely.
the idea of liquidity event is like somebody needs to sell, so they push it up, they sell, and then if it's gonna continue, it kind of needs to go below that, right? Because this guy wants to sell every single spike. If we were to add another variable, I actually would be really inclined to see how anchored VWAP from the time of the liquidity event. Do you think we could add that as a variable in our charts?
Yeah.
So if you can do that, and before, like you sent a bunch of pictures, right?
Yes.
If you don't mind, if it's not complicated, I would love to see, like you can delete the Google Drive. I recommend deleting it. And then, but every single point there was a liquidity event, just have anchored VWAP from that point on and moving forward. And then when I look through all the graphs, all the charts, I could tell, should we use that, should we not use that, or like at what point you could have.
Yeah, that sounds a good idea.
Yeah, awesome.
That sounds like a very good idea.
Do you mind if I delete the Google Drive right now?
No.
Okay, I'll delete it right now, and then yeah, if we get it with the anchored VWAP, that'd be super duper sexy. And we're just a few days away from crazy ass adventure. So
Yes.
bro, you're awesome. I appreciate your patience. I'm done on my end, so up to you.
Yeah, me too. I'm actually getting quite sleepy.
Okay. Thank you very much, bro.
It's
Looking
like-
forward to it. I appreciate
Of course,
it.
no worries. Thank you.
Appreciate all the hard work, bro. Chat
All right.
soon.
All right. Take care. Bye bye.